Hello everyone and thank you for joining. Today I'll walk through Meta platform covering recent performance, the latest developments, growth drivers, financial outlook, risks, and what it means for investors. I'll keep this practical, data-driven, and focused on what matters over the next 12 to 24 months. Quick snapshot and why it matters. Meta continues to post strong top-line and bottom-line results, underpinned by robust digital ad demand and measurable benefits from AI in ranking and creative tools. In the second quarter of 2025, Meta reported approximately $47.5 billion in revenue and $18.3 billion in net income, reflecting healthy margins. Management guided third quarter 2025 revenue to a range of roughly $47.5 to $50.5 billion, implying sustained momentum in ads and engagement. Year to date through August 11, 2025, Meta shares were up around 32% on a major market tracker, outperforming the broader market. On valuation, some respected research shops peg fair value in the 700s per share, with others seeing average price targets in the mid to high 800s. Take these as directional rather than absolute. Why it matters. The core ad engine is not only intact, it's accelerating with AI. That, plus new monetization surfaces, provides multiple levers for continued growth. Transition. With that context, let's cover what's new. Latest news and implications. WhatsApp ads expansion. Meta announced ads for the WhatsApp Updates tab, which is used by well over 1 billion people daily. This adds a fresh, high-frequency surface to the ad portfolio, beyond Facebook, Instagram, and Threads. Implication. New, scalable ad inventory supports volume growth without overly relying on higher pricing. Expect a gradual ramp given privacy sensitives and targeting constraints on WhatsApp relative to Instagram. Brand safety and scam ad controls. Meta tightened brand protection protocols to counter scam ads and improve advertiser trust. Implication. Reducing fraud risk is crucial for retention and pricing power, particularly for large global advertisers who are sensitive to brand safety. Business messaging momentum. Meta describes business messaging, including paid A2P messages on WhatsApp, as a multi-billion-dollar run rate with double-digit growth. Independent industry estimates suggest 2025 paid messaging revenue around $2.5 to $2.8 billion. Implication. This is still early but real. As more SMBs and enterprises adopt WhatsApp for customer service, notifications, and commerce, pricing and penetration can expand. AI infrastructure investment. Meta raised its 2025 capex outlook to about $66 to $72 billion, largely for AI infrastructure and data centers. Implication. Near-term free cash flow can be pressured, but the long-term payoff is a deeper moat in ranking, recommendation, generative tools, and developer capabilities. Reality Labs signals. Meta previewed advanced VR prototypes and continued AR/VR R&D. Implication. Long-dated optionality. Near-term P&L is dominated by ads. However, device and platform advances indicate persistence toward a future AR/VR platform. Transition. Now, how do these developments translate into growth drivers? Core growth drivers. AI-enhanced ads and engagement. AI ranking and creative tools are lifting conversion rates and ad performance across Instagram, Facebook, and Reels. Reels monetization has improved as ad loads and tooling mature. Takeaway. Better performance keeps advertisers spending, supports pricing resilience, and expands total impressions. WhatsApp monetization. Ads plus business messaging. Ads on updates expand the top of funnel. Business messaging monetizes mid and bottom funnel customer interactions. The TAM spans SMB marketing, customer support, notifications, and conversational commerce. Takeaway: this is Meta's most under-monetized asset with a massive daily user base. Expect a multi-year build, not an overnight step change. New surfaces, Reels, Threads, and beyond. As feeds approach high ad loads, Meta grows inventory on Reels, Threads, and now WhatsApp. This reduces reliance on price alone and diversifies revenue sources. Takeaway: more surfaces mean more ad opportunities without sacrificing user experience. Platform effects and network scale. Meta's family of apps continues to deliver cross-app distribution and data scale for training and inference. Strong network effects support superior targeting and measurement compared with smaller rivals. Takeaway: scale compounds AI advantages, which compounds performance, which keeps the ad flywheel spinning. Transition: let's talk numbers and capital allocation. Financial outlook and capital allocation. Revenue: Q3 2025 guidance of roughly $47.5 to $50.5 billion suggests continued double-digit ads growth. Profitability: high margins remain supported by automation, AI efficiency, and disciplined OPEX management outside of AI infra and reality labs. Capex: the $66 to $72 billion 2025 capex plan funds GPUs, data centers, and networking to power ranking, recommendation, generative models, and creator tools. Cash returns: management has a track record of buybacks and, more recently, initiating dividends. Expect continued repurchases if cash generation remains strong, though capex will be a swing factor. Investment framing: elevated capex can compress near-term free cash flow, but if AI ROI continues to show up in engagement and ad yield, the spend underwrites durable competitive advantage. Transition: what could go wrong? Key risks to monitor. Regulation and policy. Privacy, competition, and child safety regulations, especially in the EU, can impact data usage, targeting, and product rollouts. Mitigation: Meta's compliance tooling and privacy-preserving ad tech help, but policy risk is intrinsic to the model. Brand safety and fraud. Scam ads can erode trust and reduce budgets. Mitigation: tightened brand safety protocols are positive. Performance must be consistently demonstrated. Macro and advertiser budgets. A cyclical downturn could slow ad spend, magnifying the impact of elevated capex on free cash flow. Execution on WhatsApp ads and messaging. Adoption curves may be slower than bullish expectations. Targeting and measurement might be more constrained relative to Instagram. Reality labs burn. Hardware and platform bets can remain a multi-year drag if timelines extend. Pulling it together, what's the bottom line? Investment takeaways. Core ad engine, healthy and improving, driven by AI and new surfaces. Q2 strength and Q3 guidance validate momentum. WhatsApp, a significant multi-year monetization runway. Ads on updates plus business messaging expand Meta's revenue mix with large global upside. AI capex, high spend raises execution bar but deepens the moat. The key question is ROI timing. Early evidence in ads is encouraging. Valuation. Research estimates suggest some upside remains from current levels, acknowledging dispersion in targets. For longer-term investors, the combination of scale, AI leadership, and under-monetized assets is compelling, balanced by regulatory and capex risk. What to watch next? Practical checklist. Quarterly ad revenue growth versus guidance. Watch Reels and WhatsApp contribution color. Updates on WhatsApp ads rollout pace, targeting, measurement, and advertiser demand. Business messaging growth rates, attach rates for SMBs, and enterprise case studies. AI infra disclosures, GPU fleet growth, data center expansions, and impacts on model performance, brand safety metrics, and advertiser retention trends, any changes to capex outlook, and free cash flow trajectory. In summary, Meta remains one of the most structurally advantaged platforms in digital advertising, with AI-driven performance and a large, under-tapped monetization avenue in WhatsApp. Execution on AI and messaging, together with careful management of regulatory and brand safety risks, will determine how much of the multi-year upside is realized. Thank you, and I'm happy to take questions or tailor this for a slide deck.